We are expecting this law to fundamentally reshape the accounts receivable market.
Business climate was very difficult and foreign investors were always pressured.
The main challenge is the awareness of the product on the market.
Provide this middle corridor as an alternative to other routes that right now are facing serious geopolitical challenges.
Legal reform is what turns digital trade from concept into reality.
AI saves us from manual work, but all the cases, all the decisions, final decisions will be made by human.
Can you talk us through the journey, the legal reform, and why it's important for receivables finance?
You're absolutely right. We passed the law in April this year, 2026, and we are expecting this law to fundamentally reshape the accounts receivable market because it addresses a couple of key challenges that further hinder development of the market. First of all, it should be mentioned that the law is regulating the imbalance in power between buyers and suppliers, sellers, especially between big retailers and SMEs. Since big retailers have been restricting SMEs to assign their accounts receivable to factors or other to third parties.
We have positioned ourselves as the transparent and open voice of the business community here. This means we usually say what other business organizations are reluctant to say for a reason or another. We have many mandates. One of our mandates is to protect the interests of our members, because when we established the ICC here, the business climate was very difficult and foreign investors were always pressured by the authorities.
The main challenge is the awareness of the product on the market, and the factoring is less understood than traditional lending products, so awareness of the education of the corporates and SMEs are essential. Most recently, the adoption of dedicated factoring law can be marked as a significant milestone for the market, and it provides much needed legal clarity and also recognition of the factoring as the standalone financial instrument.
Now, Caucasus, for the simple fact that is in the middle between Central Asia and Europe, has significant geographic and geopolitical value in a middle corridor where the trade needs and growth opportunities for the economies linking Central Asia or Asia in general and Europe are having an important, conduit to address the demands between them.
And you ask because there's a lot of e-commerce and digital transactions you're paying with digital payment. But the trade itself, we're talking about when trade gets loaded on cargo, on ocean vessels, those are still relying on paper.
The problem was that our experts spent their time on manual, repetitive tasks, and we wanted to protect their time and let them concentrate on decisions that truly matter. And that led us to explore AI solutions.
By creating the platform, we are hoping that for SMEs it will be easier to access the factoring services and satisfy their demand for working capital through the factoring transactions. And we are expecting that in the next 10 years, the factoring platform will be hosting about 10 billion in transactions, which will be about 3 to 5% of the GDP.
In a world that is moving so fast, you cannot be the last one to change. You have to be the first one to change. If you don't move forward, you're going backward. And digitalization of international trade has a lot of benefits for the business community and for businesses, because it speeds up the process. Usually, it takes 15 days to 1 month to receive your documents. With the digitalization, it takes hours or a day or two And then it's accessible to everybody, I mean, to the banks at the same time and to the authorities.
Bank of Georgia is driving digital transformation of trade finance products on the market, and with focus on simplifying access to financial instruments and enhance the customer experience, and also enable wide use of trade finance solutions on the market. So as the technology-driven bank with a strong commitment on the innovation and customer-centric solution, we aim to adopt the trade finance products to make it more easier, faster and accessible for our customers.
It is going to give solutions to the needs of the economies connecting by reducing the bureaucracy, the time which is actually right now spent on processing papers and getting goods from one place to the other. And we are very much supportive of the political as well will among the countries to cooperate and provide this middle corridor as an alternative to other routes that right now are facing serious geopolitical challenges.
But the problem is that all those rights have been historically associated with a possession of a physical document in the past. And that means that even if every single step of the way has been digital, that trade deal itself is still anchored in paper. So that creates a structural bottleneck, slowing down transactions, increasing costs, and also restricting access to finance.
We started with POC, and it's already give us good results. So we have noticed that efficiency could be increased. But it's not only the efficiency, it's a risk distribution as well, and it's also impacts customer satisfaction.